Welcome back. So, we still have maybe one or two topics I can think of on the top of my head that could help you in trading, which I use. Um, but I thought I should do a. This is not a live trade. I will be doing live trades later. It's just sometimes when I'm focused on trading, I'm not thinking of I should make a video of me live trading and explaining a trade and maybe going off track with my trading. So I will do that in some next videos, but now I'm going to explain a trade, how I took it, and for you to understand my way of thinking and how to put all the topics we learned together and see how I look at trading, how I look at potential fakes, and how I look at potential directions and all that stuff. So basically, I like to switch through all my time frames. So here I see straight away daily is down. From this market structure down, I was already bearish, but the price went up. So this is not really a problem more to say like how is that possible? Because even though it did a market structure shift to the downside, you did have basically a POI in here which reacted the price. And this was a liquidity zone. So I'm not surprised the price went up to sweep that liquidity. Also, this liquidity here after the breakdown, before now giving us 1, 2, 3, 4 days of drops and plus or minus now the fourth. So I'm bearish, so down on the daily. The 4 hour for me is also very, you know, bearish going down because clearly if I draw a trend line, it's clearly going down and there hasn't been any breaks back up. The only like I've only had a break past this low here. I've had a break. I had a break below this full low here, and now I've had a break below this low. So I'm only breaking structure to the downside. Also, what I like to do is I mark out liquidity. So when the price was around this zone, I mark out liquidity points. This is a liquidity point. This is a liquidity point, and this one. So when the price went down, as you can see, this liquidity did cause a reaction and it went up. So you could have caught a win in there. It's possible, it's not a problem. Even though I'm bearish, you could have caught a win in there. And as you can see, it went up to fill in a 4 hour fair value gap. It probably filled in, for example, something on the 1 hour, maybe a 1 hour, yeah, 1 hour fair value gap as well, maybe a 1 hour breaker in there. If I look closer, you basically have a 4 hour breaker block here that I reacted off as well, you see, because this pushed price up into this liquidity point and then also into this big POI in here. So for me, that is a breaker block. Obviously, as I said, trading is part of what you do and how you do it. And if someone else uses a breaker block differently and has different targets that a breaker block needs to do for it to be a breaker block, that's their choice. I'm not against it. That's perfectly fine. That's just how I do it and it works. So today we are bearish, right? We've swept this liquidity, we've hit this POI. When we hit this POI, we did have some reaction up as well. So that could have been a trade for you. Then let me just check. That was actually Wednesday. Yep. So Wednesday when it hit this POI, you could have either look, Wednesday morning is here, 7 o'clock is inside here. So Wednesday you could have caught a sell in here, a sell, which I actually did. Wednesday I did sell and it went down. And after the sell, so you see you have 8 o'clock Frankfurt in here plus 9 o'clock starts here. So sell from 8 o'clock was Frankfurt open for me, or 9 o'clock here down to here because we obviously have this breaker here that reacted the price to go down and some things on the lower time frame. So a mini sell into the POI again, and as you could see, we did have a liquidity sweep of this low. This is Frankfurt low right here. So down towards Frankfurt low, we had a sweep on Wednesday. So after we swept that liquidity, we saw the price rally up. So that was a buy for you. It swept this liquidity point here and it hit this POI. in here. So let's move the breaker. It hit this 2 seconds. Yeah, it hit this POI, and the liquidity sweep was perfect. It did a big wick on the 1 hour, so it swept a 1 hour liquidity, and it also hit a 1 hour POI, and the 1 hour liquidity sweep closed good. So that's what you kind of want to see. When a 1 hour sweeps a 1 hour liquidity, you want the 1 hour to close under the sweep because it's a liquidity sweep. So then we went down and we reswept all this liquidity and caused a reaction up. We retested it down and then started to rise, meaning we're failing to break this. We need some liquidity. So the price goes up and it sweeps this liquidity point, which is more than likely a liquidity point on the 15, and it is. It's a liquidity point because it went up. It also swept this liquidity point to the left here. I just want to change my colors to black. So it swept this liquidity here and then it dropped down, breaking this low here altogether later. So you have this liquidity plus, or like, keep going. And then let me see what day. This is Wednesday, so 6 o'clock Wednesday. Yeah, this is during New York. So we swept that, but here, so to Thursday, the liquidity sweep only happened during Asia session before Frankfurt even opened. So you can't catch a trade or fail the trade if you sold from this liquidity sweep instantly, because this is not inside your trading zone, how we learned about sessions. So you have 12. This is today. 12, 1, 2, 3, 5, 6, whatever, 7. Now you have 8 o'clock is here. So we have 8 o'clock is Frankfurt open. I'll just mark it out. Is Frankfurt open. So we go up into this POY here because this is the block that caused the wick. You see the price went up, wicked, and dropped before the big start of a downtrend. So in there we have a POI after the liquidity sweep. You could potentially also call this now a order block because it did sweep a liquidity point. So this could be an order block, POI, or both the same. I use order blocks and POIs exactly the same. It's only that you could potentially use an order block to make your trade stronger, in the sense of, have if you're looking to trade maybe once a week or 2 times per week and like a really good A plus setup, you could potentially rather use order blocks than POIs to make sure your trade is more risk, no, more chance, more probability of succeeding. So anyways, order block or POI, preferably I would like this order block after this reaction to go down and actually close below this straight away with just like straight black candles, but it didn't. It closed after, but both ways work. So order block or POI doesn't matter. So now we have the Frankfurt on the 5 minute. Frankfurt goes up, taps that POI, but also inside the POI, I'm just going to remove this line so it doesn't get in the way. We have this 5 minute high, you see. So this 5 minute high also acted as a liquidity point inside that order block. As you can see, it got swept. It would be this line right here. I'll change it to red. Liquidity taken, that line. So it swept liquidity. Now, I did take my trade during Frankfurt before London Open, just about before London Open. So when we go on the 1 minute, we have the first touch of POI. We never broke structure down, so we couldn't have taken an early trade and accidentally lost because we went in too early. Nothing happened, so the price went up. That's when some people could have said, oh, I'm going to start buying in here because it broke this high inside the POI and I'm going to start buying. That's what happens when you don't wait for confirmation or you have your bias wrong. I was bearish on most of my time frames and my direction. So then I'm looking for sells. Then we have in here, after this, we have the drop. Also, as we can see, the 5 minute liquidity was the red line. It wicked above and it didn't close above. This is a little bit of a glitch in the pricing on the app. Nothing, it doesn't always show perfectly, but it closed under. So the 1 minute reacted good. It went down. This is a low for me. This right here is a low because the price goes down and then from here it goes up and closes as a bullish candle. So it is for me bullish. So that's a market structure shift right there, back to the downside, okay? So then from here, what I'm looking at is this would be a liquidity point if it goes and gets taken, okay? It is a liquidity point, and then you would have your stop loss up here. Not stop loss, you'd have your POI in here, waiting to protect your stop loss above here. But then I was looking at the trade, and what I had was the price went down, and it obviously closed below this just about. Also, this could be a glitch in the price. So this is not exactly the best break out of this low for a continuation. So you wait. The price was just moving around, moving around. You could see it goes up. It reacts of, you could say, the fair value gap, and the wick of the POI goes down. I might have entered one position in here with a smaller risk. Then it went up, just a little bit of consolidation. Then it broke back up and it touched the POI. Good. But as you can see, it touched it here and it wicked really good and it printed a really good candle in the right direction. So I entered in this zone. Um, you could have a few different entries, early, late, or whatever. If you're in this trade, that's all that matters. And obviously, you don't want to enter somewhere like down here, crazy, and then stop loss up here, the stop loss here. So I entered in this zone. I didn't enter just one position. I entered maybe two or three. So the first entry you could have had, which would have worked, is a short position after the candle that moved. It's a big candle down to the downside. So stop loss could have been like this tight, or you could have gave it some space in case the price goes a little bit above, sweeps liquidity and goes lower. So that would have been an early trade. And also, it's a little bit dangerous because right here is our New York Open. And London, as we know, London likes to sweep liquidity before going and continuing to a direction. And the first liquidity could have been your stop loss, so this high right here, and then go down. That would have been this high right here. If we just delete this POI now, it would have been this high right here, would have been liquidity, and this high could have been liquidity. So it's a little bit of a dangerous trade, but sometimes you gotta take risks in trading to succeed and not be scared. That's what I said in the last video. If you see a good setup, you can't always be scared, but if you have good reason not to enter, then don't enter. So then the second entry after this could have been you waited, the price came back up here and touched your POI again, really good with a wick, down, wick again, and down with a black candle. But then this is your low, and this would be your market structure shift from that POI again, because we did have a market structure shift up to show us that maybe after here price can go up to liquidity sweep, but then we broke back down. In here, I was fully confident when I saw this, and this would have been the trade. And then you have liquidity points down here. Down here, you have liquidity points. You have liquidity. Okay, yeah, no, I'll just do it again so you can see it. I want you to see it good. You have your stop loss in this position, and then you have different liquidity points. You have Frankfurt low somewhere in here. I think it would be this Frankfurt low. That's a 2.4 liquidity here, here, everywhere. Liquidity right here, kind of the bottom place before the rise up. And you're hitting a 1 to 4, 1 to 5 trade. Now it's gone up. You could still hold the trade because you have your POI in here. After this big drop, you have liquidity points in here, which it took, went up to the POI, reacted. So you could hold here and continue the trade lower. But yeah, it's decently simple if you look at it. You don't have to overcomplicate it. And yeah, just look at the market understand the market. Don't make anything too difficult for yourself and trade. If this took a loss, I wouldn't be angry or thinking, wow, my trading is so bad, because like I said, trading, you could see an opportunity and take it. Somebody who wouldn't take the opportunity and wait for a better confirmation would have not caught this trade. Me, who took the opportunity, I caught this trade. Also, at the same time, the person who didn't take this trade could have been safe if the trade, like I said, on could have went up first, liquidity sweep, and then down. I would have lost, but then I would have probably entered the trade again somewhere in here, a second trade, and then won the trade. Or they maybe waited, and then London Open could have went here a little bit down, and then boom, took me out, and then went a lot lower. That could have happened, and the person who was safer could have had a better win rate because he would have never lost. But that's trading for you. That's just trading. Not everybody is the same. Everybody's different. Everybody's thinking is different. Even if they use the same strategy, they will have times when they're thinking differently of their entries, and that's when you don't understand. Losses are part of the game. Wins and missing wins is part of the game. Losing 2 times in a row is part of. It's not a game actually. It's you can't play this because you're gonna lose money if you play this like a game. This is not Fortnite or Rainbow Six. So yeah, it's maybe closer to GTA. Free roam, do whatever you want, be crazy. But yeah, that's just the trade. So yeah, as you can see, I just traded simply. Didn't overcomplicate anything, not too hard. So this was now a breakdown of a past trade, not a live trade. I will try to make a live trade and maybe post it on YouTube as well. And then you can see my thinking right in the moment and basically my emotions. People say you can't have emotions in trading and all this stuff, like you have to be completely emotionless. You always have emotions. No person that is always non-emotional, always when they look they say, no, this trade's maybe not good. That's emotion, because you're looking at the trade and you're thinking, I might lose this, I'm going to lose money. That's all emotion. Yes, you have to learn to control it and not let your emotion go mayhem, where you say, I'm scared to lose, and you never enter. Or, oh, I see money, I want more money, and then you lose the whole trade. You have to control it and not go over the top. But if you keep it simple and you don't over risk, you will succeed. So I'll see you in the next video.